get a mortgage. Now, a lot of people will make mortgages seem like it's rocket science. Sometimes mortgage brokers do that, sometimes banks do that. But simply said, getting a mortgage is a step by step process. It's easy to understand if it's broken down in the right way. And if you're speaking to a mortgage broker or a person who has an understanding of how mortgages work, they'll make it very simple. So, first and foremost, as I said, it's not a rocket science. It's not something that is a dark art. Always use a broker. And the reason why I say always use a broker is because a broker is going to give you more choice. Getting a mortgage is always as fast as the slowest person, and always make sure that you work with a broker that you know and that you trust. Always remember that your property may be repossessed if you don't keep up the repayments on your mortgage. All right, so let's talk about mortgages. Let's talk about the step by step process. I'm going to explain it in a way that's simple and easy to understand. So, the mortgage process, if we break it down into each step, first, you're going to speak to a broker. I'll explain why you should always speak to a broker at least 6 months before you think you're ready. And I've said those words very carefully before you think you're ready, 6 months before that. The first thing that you'll do is get an agreement in principle. That's after the mortgage broker has assessed your situation and can give you some guidance on who will lend to you based on your specific circumstances. Then you'll go out and find a property. Once you've found the property, you're going to need to negotiate. Now, I offer a free negotiation service. A lot of people don't take me up on it. I don't know why. But remember, I do this every day. So even if you're a doctor, a solicitor, any kind of professional, I wouldn't be able to go and do your job after looking on YouTube or Chat GPT. I wouldn't be able to go and do it as well as you can, just like you can't do my job that I've been doing for over 30 years as well as I can, because I do it every day. So you'll find it, you'll negotiate. Once you get an offer accepted, you're going to do the full mortgage application. Then you're going to do what's called a valuation. And this is valuation, not a survey. So this is when the bank goes out and looks at the property. Sometimes they do what's called a desktop valuation, meaning they don't go out. But anyway, the bank is going to value that property. It doesn't matter what the seller thinks. It doesn't matter what the council thinks. It's what the bank thinks that the property is valued at. They also then do the underwriting. Once they've done the underwriting, which takes about 10 to 15 business days in most cases, then you get a full mortgage offer. This is when the lender is saying, yeah, we're happy to do an agreement in principle for you based on your circumstances. But now we've looked at the property, we've looked at your documents, we want to lend you money on your specific property based on your specific circumstances. This is when it's essentially handed over to the solicitors. So your solicitor deals with their solicitors. But this is also why you need to make sure and find a good solicitor before you get to this stage. Because when you're doing the full mortgage application, one of the things that is required is the name of your solicitor. So if you work with me on the very first conversation, I will introduce you to some solicitors. Now, let me be very clear. I'm just making some recommendations. Do your due diligence. Don't select the solicitor based on what your mortgage broker has told you, or even worse, what the estate agent tells you. Always go out, do your due diligence. Don't shop based on price, because a cheap solicitor can end up costing you more money in the long run. But find a solicitor that you trust, someone that's been recommended to you, someone that's not just the cheapest, but someone that can talk to you in your terms. Not every great solicitor is a good match for every great client, because some clients need a more hands-on approach. They want to be able to call and talk and ask questions. Others are a little bit more comfortable with doing things online. So what I'll do is I'll introduce you to two solicitors. I'll get you a quote on a solicitor. That way, especially if you're a first-time buyer, you have a reference point. Because if you've never done this before and you just go and speak to a solicitor without a reference point, then you don't know if it's good, it's bad, you don't know what you're comparing. So once the solicitors are talking to each other, then you will then go into what's called the exchange. Now, an important point about this is throughout the mortgage process, you are not legally obligated, and the seller is not legally obligated to complete until you get to about this point. So there is a process in the UK where sometimes late stages before the exchange of documents, some sellers pull out and some buyers pull out. In fact, I think they said about 50% of all mortgage deals fall through. It could be because of the buyer, it could be because of the seller. There's various reasons. After you exchange, you then complete. My name is Anthony Lindsay, and I've been in finance for over 30 years. I've done debt collection, wealth management, and lending. So when you come to me, you're not just getting a mortgage, you're getting someone who understands how to get you a mortgage that puts you in a position that you've done things properly. Your individual circumstances have been considered, and more importantly, when you go to remortgage, you won't be what's called a mortgage prisoner. There's lots of mortgage brokers out there that will just get you across the line, but you want to work with someone that's considering your long term goals. As I always say, and as I'm required to say, your property could be repossessed if you don't keep up the repayments on your mortgage. So now let's look at this. Let's just talk about buying your first home. Honestly speaking, you don't want a mortgage, you want a home. Getting a mortgage is a required part, unless you're really rich, of buying a home. So you go to a mortgage broker to help you get that mortgage. Now, I've been in finance, as I said, for a really long time. And it wasn't until probably within the last 10 years that I actually realized everybody should use a mortgage broker. I was under the assumption that, well, if you have a UK passport, no credit issues, you just go to your bank because your bank's going to give you a great deal. But that's not the best way of going about it. The reason is when you go to your bank, as good as they may be and as much as they may want to support you, they can only talk to you about their products. When you go to a mortgage broker, your mortgage broker can search the entire market, depending on if they're whole of market or if they just work with selected lenders. But either way, they're going to be able to give you more choices than going directly to your bank. The other thing is, most mortgage brokers, like myself, we have hours that work around you. So I do appointments on Saturdays, I do appointments on evenings. I work around your schedule. Whereas with the bank, you're going to be limited in when you're going to be able to talk to them. The other thing is your bank's not going to give you advice. They will execute the mortgage. They will tell you what's available. They're not going to suggest builders. They're not going to suggest, painters or solicitors. They're essentially just going to execute the mortgage. And you need more than that. Even if you're an experienced buyer, you need someone that's going to hold your hand, walk you through the process, and explain in detail what you're doing. It simply comes down to what I call SID. So credit, income, deposit. If you can understand these three things, and if you have these things straight, then you can understand the mortgage process very easily. I'm going to go into each of them individually. Always use a broker, and don't believe the myth. Don't believe the thumbnails or the hype or the clickbait where they make it look like banks don't want to lend money. Of course, banks want to lend money. They exist to lend money. And yes, they make money off doing it. But banks want to make sure that you are in a situation where you're getting the best mortgage and you'll be able to keep up the payments. As I mentioned earlier, I worked about 10 years in debt collection and pre litigation. So I was the person that had to go and speak to someone in their home before a property was repossessed. And it's not a good feeling, and nobody wants to get their property repossessed. So banks want to make sure that you can afford the property you're buying and you'll be able to maintain it. And a good broker is going to make sure that you are protected from yourself sometimes. I've had clients who, on paper, they could afford a mortgage, but after I've talked to them and after I understand what their long term goals are, maybe they're looking at moving back to their country of origin. I will advise them based on that. So you want to make sure that you understand banks are there to help. And if one bank says no, you may need to go to a specialist lender, but that's not a bad thing. But big tip, big tip. And I say this all the time. Don't get your advice from social media. I know I'm on YouTube, yeah, but you can call me and speak to me and I can go through your individual circumstances. So what I cover off in these videos is general advice It's information that maybe your broker hasn't told you, and it's impartial because you may never reach out to me. But you can test the information that I'm giving. You can test it against other mortgage brokers who understand your circumstances. And you'll see that what I'm saying is holistically correct, but each circumstance is different. So, step one, this is what you want to know. What is step one of getting a mortgage? Step one is speaking to a mortgage broker and getting an assessment. During the initial conversation, what I will do is ask you some questions that first and foremost we can determine if structurally the deal will work. What I mean by that is if you are on £50,000 a year and you want a £700,000 house and you only maybe have a £50,000 deposit, it's not going to work. And a good broker is going to tell you that up front. They're not going to sell you dreams. They will tell you what is possible or how to get from where you are to where you want to be. A mistake that a lot of people make, and especially right now at the filming of this video, there is some turbulence in the mortgage market. People say, what's the best rate? Now, the best rate isn't always the cheapest deal, and rates go up and rates go down. So I always ask my clients to focus on the monthly payments. So, can you afford the monthly payments? Because the good news is most mortgages in the UK, you can overpay by about 10%. So I always try to find a monthly payment that is comfortable to the client. I'll ask the person about their deposit. Now, there's a thing that just circulates in society where people talk about deposits in terms of percentage. So they'll say, "Oh, I have 5%, or I have 7%, or I have 10%." That's not the best way to go about having the initial conversation with a mortgage broker, because a percentage is not a static thing. So if you're buying a house that's 500,000, 10% of 500,000 is different than 10% of 480,000. So I'll always ask you how much you have in pounds that you can prove with a bank account for your deposit. Keep it in mind, there are other fees that you will need to come up with when you're doing a mortgage. The term determines the monthly repayment. So the shorter the term, the higher the monthly repayments. The longer the term, the lower the monthly repayment. So I will always ask my clients, what's a comfortable monthly repayment? I'll match a term to that and then make sure that it's something that's affordable. If we can make this term a little bit shorter and still make it affordable, we'll do that. Alternatively, we'll find a monthly repayment that is affordable to the client with the understanding that they can overpay by up to 10%. On most mortgages, they can overpay by up to 10% per year. Another thing that I like to point out is it takes longer than you think. So I get calls every day and people are like, "Oh, I need this quickly. I found a property. I need an agreement in principle right now." And I will never be the slowest part of your mortgage deal because I move quite quickly. But I do find that the thing that slows down most mortgages is the client, because a lot of people take a long time to provide the documents or they don't respond to emails. So a mortgage can move quickly, but it will be as fast as the slowest person. This is also why it's important to have a good solicitor who's responsive and someone you know will respond to you and respond to the seller solicitor in good time. But let's look at SID, credit, income, deposit. Because if you understand credit, income, and deposit, then you'll be able to understand the mortgage process. One of the things that I've done after my 30 years of working in finance is I've written a book. It's called A Mortgage is a Really Big Loan. Because even experienced buyers have often asked me, well, I have a mortgage, but I don't really understand what a mortgage is. And my simple answer is it's a really big loan. And if you understand that and you understand credit, income, and deposit, you'll be able to go through the mortgage process with confidence. A quick tip, do not go on Zoopla or Rightmove and say, "Oh, I saw this quote on Zoopla or Rightmove. Anthony, can you match that?" Keep in mind when you do those not credit, but those mortgage assessments on Rightmove or Zoopla, they're not taking into account your criteria. So they're not taking into account you just started your job or you have a gifted deposit or you're on a skilled worker visa. all that's looking at is just the numbers. So it can be really misleading when you go on Rightmove or Zoopla and it says, oh, you can borrow £620,000 and your payments are going to be X per month. And then you come to me and I'm like, yeah, but because you're on a skilled worker visa and because you have a smaller deposit, you're not going to be able to get a mortgage with Nationwide, or you're not going to be able to get a mortgage with Halifax or Barclays. If specifically, now we're talking about skilled worker visa, if you're on a skilled worker visa, you can buy. Don't believe what your friends and family are telling you that you can't get a mortgage. You can. You are limited with the lenders, especially if you have a small deposit. So if you have, if you're looking to pay down a smaller amount, which is going to equate to about 5 or 6 or 7%, then you're not going to be able to go to the mainstream lenders in most cases. But there are about 4 lenders in the UK that will lend to skilled worker visas with smaller deposits. And I work with all of them. So don't go directly to your bank. Always speak to a mortgage broker if you have a skilled worker visa, because you may go directly to your bank and they're going to tell you no. Now, keep in mind, that's not a mortgage decline. That just means that you don't meet their criteria. But let's look at credit, income, and deposit. Let's start with credit. When I'm speaking to my clients, I always point out it's credit profile and not credit score. What do I mean by that? Your credit profile is how you make your payments. Your credit score is a number. Now, there is some correlation between the two, but let me give you an example. If you're new to the UK and you don't have that much credit, you could have a credit card and, a personal loan, and you've paid really well, and your credit score might be low, but your credit profile will be strong. Conversely, you could be someone that has a bunch of credit cards, and maybe in the last couple months or in the last year, you've made a late payment or you missed a payment. That would mean that you may still have a higher credit score, but your credit profile will eliminate you from being able to get a mortgage with some lenders. Some lenders' criteria will say if this person has missed a payment on a credit card or a personal loan within the last 6 months, 12 months, 24 months, we just won't lend. So it will be an automatic decline. This is another reason why you want to speak to a mortgage broker who's going to go through all of the criteria before they put it in front of a lender. Okay, so that is your credit profile versus your credit score. The other thing that I would say, stop applying for new credit. Don't go out there and start applying for credit cards and loans. I would suggest for the 6 months before you are going to apply for a mortgage, don't apply for any new credit cards, any loans, anything like that. Just make your credit as clean and as straightforward as possible. That means if you have any small balances, just clear them. I frequently have clients who may have £15,000 in savings, but then they owe £4,000 or £5,000 in credit. Pay those things off. It's better to pay those things off and not to be having to assess the repayments on that and have a lower deposit than have a higher deposit and you have credit cards. That may not make sense, but I can guarantee you it's going to get you a better deal. Be honest about what's out there. So, what I mean by that is if you have credit issues, let the broker know in advance. That way, we can put you with a lender who will lend despite those credit issues. This is when we start talking about specialist mortgages or specialist lenders. Some people have the misconception that a specialist lender is a bad thing. It's not. By definition, pretty much every lender is going to have an area that they specialize in. So for first time buyers, I know if I have a first time buyer who, is UK passport, decent deposit, I know that Nationwide is usually a good lender to place them with simply because Nationwide does better income multiples. So that's your credit. So we've talked a little bit about your credit. And if you're getting a mortgage, you're going to want to understand the criteria. And as I said, it's credit, income, and deposit. I'm going to explain your income when we come back. All right, so we've talked about credit. Now we're going to go into looking at your income. So the other part that's very important in getting a mortgage is your income. And your income isn't just about how much you make, it's what type of job you have. It's also how long have you been at your job. So know your employment status. It's shocking to me how many first time buyers or even people that come to me for a remortgage don't even know how much their annual salary is. So what you want to understand is, are you full-time contractual employed? Are you PAYE? Are you self-employed? Are you self employed through a limited company, or are you a sole trader? All of these things make a difference. And this will help us determine which lenders we're going to place you with. Why? Because if you are PAYE, lenders look at your base salary and it's all good. If you're self employed, what they want to do is see at least 1 year, but in most cases, 2 years of SA 302 and tax overviews. So I get people who come to me and they've maybe been in business for 6 months and they may have turned over £100,000 and they say, well, we can put it as £100,000. Uh-uh. The lender wants to see what you actually declare at the end of that year. So if you're starting a business and you're going to be applying for a mortgage as a self-employed person, in most cases, you're going to need 2 years SA 302 and tax overviews. But there are some lenders that will lend based on 1 year. It's not projections, it's what you've actually filed with HMRC. The easiest way is if you're PAYE. So if you're a full-time employee with a base salary of X. And the great news about that is you could be changing jobs. So right now you might be working at ABC Industries and you've just got a job offer for more money at another company. There are lenders who will lend based on the job offer as long as you're starting within the next 3 months. And here's the caveat: it has to be a nationally recognized business. So it can't be Anthony Grocery Store or a friend or family member's business. It has to be a nationally recognized business. You must have the offer of employment, and we would send that over. But on the flip side, some lenders will not lend while you're on probation. So you could have started this new job at Meta, let's just say. Everybody knows who Meta is. It's a real job. You're on 120,000 a year, but you're still on probation. So some lenders will need for you to wait until you're off probation or until you pass probation. Again, this is why you want to go to a mortgage broker. And this is why you want to speak to me at least 6 months before you're ready to apply. Because if you are planning on changing jobs or going self employed, I can give you the best advice. And the great thing is, I'm not going to talk through hypotheticals. I'm going to give you specific numbers, very open, very transparent. I'll show you who will lend to you and why. With your income, it's what HMRC says. So check your P60. And these are some of the documents that you're going to want to prepare before you apply for your mortgage. So your P60, your last 3 months pay slips. If you get paid weekly, then you need 3 months of your weekly pay slips. If you get paid monthly, then you just need two. Second incomes. Now, we are in a situation where a lot of people need to work a second job, but be very careful when you're looking at second job income. Lenders understand, and remember, banks aren't stupid, and neither are mortgage brokers. Now, if you're working at, again, Anthony Industries, you've been there 5 years, great salary, and then you've recently started, driving Uber or something like that, quite often the lender's not going to take that second income into account, especially if you've been there fewer than 6 months. They want to see that it's sustainable. It's something you've been doing for a while. They also want to make sure that you didn't just get it to boost the income artificially, that you could get the mortgage. Remember, lenders want to lend, but they want to make sure that you can keep up the repayments. If they do accept that second income, sometimes they won't accept 100% of it. So your full-time income might be 50,000, and then you have a second job that they do accept the income because you've been there for 2 years, but they may just accept 30 or 70 or 90% of that second income. So we'll always look at your base income at your primary job, and keep this in mind as well. If you have a second job, quite often lenders will ask for your employment contract. Why do they do that? So for example, my wife is a graphic designer, and she also has a job doing graphic design for a company. She needs to be able to demonstrate to the lender that she's permitted to have that second job. So, what they'll want to do is see her contract and see if there's any clause in there that prevents her from having a second job doing the same thing. And or they may want to see that they've been given permission to have that second job. So second incomes are great. They can boost your affordability, but don't just assume that because your first job you make 50,000 and your second job you make 30,000 that you can put an 80,000 pound income. Deposit. And I'm going to spend some time on deposit simply because deposit is where most people get stuck. A lot of people don't understand, and there's a lot of miscommunication and misconceptions in the general society. So, what a lender wants to know is where does the deposit come from? Can it be tracked? So, if you're working at, let's just say, McDonald's, and your salary is 25,000 a year, but you have a 90,000 pound deposit that just fell into your account out of the sky, they're going to want to know, how did that happen? In most cases, you're going to need to provide 3 months worth of bank statements of how the deposit was built up. But sometimes they may ask for 6 or 12 months if it doesn't tie up with your profile. If money's coming from abroad, they may need to know how that money was generated abroad before it went into your account. So don't try to hide, don't try to be deceptive, because you're not going to be able to trick the bank. They will just ask for more bank statements. When I come back, I'm going to go through what I call cultural savings. This is where Jamaican people have partners, or other cultures. What they do is they move money from one account to another. In about 30 seconds, I am going to explain why you should never do that, how it hurts you, and a better way of building up your deposit. All right, so you're building up your deposit and you have, 30,000 pounds. The bank is going to want to know where that 30,000 pounds came from. Now, I'm Jamaican. My parents are Jamaican, and I know Jamaican people, and every culture has what I refer to as a cultural savings scheme. As a partner, as a Jamaican person, it looks like this. You'll have 5 people. Each month, everybody gives, person A 1,000 pounds. And then that 5,000 pounds moves around from bank account to bank account to bank account to bank account. Don't do it. It's not worth it. It's not going to help you. And if you have the discipline to put that money in, then you have the discipline to put that money in a savings account. And I'll explain why. Firstly, it doesn't make any financial sense to do that. Why? Because if you put 5,000 pounds in, you get 5,000 pounds out. There's no benefit to that. However, if you'd put that same 5,000 pounds in a savings account, the bank will give you some interest. So if you opened a high interest savings account to save your deposit, you're going to make more off it than what you've put in. That's just simple. The other thing is, as I said, banks do not like it. I understand when my grandmother came over during Windrush and you couldn't open bank accounts because you weren't established in the UK. So we did that to build wealth, to be able to buy houses. And it may have been appropriate at that time. But if you have a bank account that your salary's paid into every month, then clearly you can get a bank account. And you can easily get a savings account. And you can get interest. And a big tip, if you're planning on purchasing a home in more than a year, so it has to be more than 12 months, you should definitely look into a lifetime ISA. A lifetime ISA is a great saving product if it's for the right reason. So if you're looking to save to buy your first home and you're under a certain age, make sure you look at lifetime ISAs, because as of the recording of this video, if you put 4,000 pounds into a lifetime ISA, the bank is going to give you 1,000 pounds. So you put 4,000 in, and within 12 months, you have 5,000. Whereas if you were doing one of those cultural savings schemes, you would be limiting what lenders will lend to you. You risk your bank account being closed. And I have seen that. I've been a bank manager for Lloyd's, Halifax, various banks, and people's bank accounts have been closed because the bank is seeing all these different payments from all these random places go into their bank account, and they just close the account because it looks like money laundering. It's not a good idea. It doesn't help you. It's going to make the mortgage process more difficult. So if you're already in one of these, what I call cultural savings schemes, as soon as it finishes, get out, put the money in a savings account. And the best way to do it is have your current account where your salary gets paid in. And then what you do is you just transfer whatever you're going to save into the savings account. It will make it so much easier when you're getting your mortgage. Another thing is gifted deposits. If you're one of those fortunate people where you have a family member that's able to gift you a deposit, then what you want to do is make sure that it's a gift and not a loan. So a gift and not a loan. If it's a loan, then you need to pay it back. If you need to pay it back, it's going to come out of your affordability. So gifted deposits are great. Keep in mind, some lenders will need the gifted deposit to be from a blood relative. So a brother, a sister, a parent. It cannot come from friends with some lenders. This is why working with a mortgage broker, being open and honest is so important. Because if you come to me and you tell me, well, I have a friend who's gifting me the deposit, I will place you with a lender that accepts gifted deposits from friends. I won't place you with a lender who does not permit gifted deposit from friends. And I know that in some cultures, you may have grown up with someone and you call them your sister, but the bank wants to see that it's a blood relative, not just someone that's really close that you call your sister. A thing that people don't know, and I like to point out to people, is that the deposit doesn't come out of your savings account until towards the end of the process, probably about 2 weeks before you get your keys. So this is also why it's great to put it in a high interest savings account, especially if you have a bigger deposit. I know people with larger deposits who have made 400 or 500 pounds in interest in the course of their savings between when they start the purchase process and when it ends, because the average purchase process is about 4 to 6 months. So it can be quicker, it can be longer, but you should prepare yourself for a process of 4 to 6 months from the moment that your offer is accepted. And keep in mind with deposit, guys, there's something called open banking. So some lenders will use open banking, which is essentially you give them access to the bank account. That way you don't have to provide the bank statements. They can just go into your bank account. What they want to see is, your salary goes in. If, like me, you have multiple bank accounts. So I get my salary into one bank account, then I transfer money into another bank account for my daily spending. If you do that, you're going to need to provide the bank statements for both accounts. Any accounts that you're transferring money into, because they want to see forensically how your money is being spent. Did you know that you may be able to buy your property with 0% deposit? It's not a hack, it's not a trick, it's not a pitch. There are circumstances where you might be able to buy with 0% deposit. I'm going to go into that very quickly. I'm going to show you the schemes and explain how they work and how easy they are if you meet the criteria. So if you're interested in buying your home with 0% down, and I mean, that's the deposit, you'll still need to pay legal fees, but stay tuned. I'll be right back and explain exactly how you do that. So yes, it is possible to buy with 0% down. Now, that's 0% deposit. You'll still have to pay broker fees and legal fees and some other fees. However, you might not need to come up with a big deposit. How is that possible? I've got a lot of videos on council right to buy. This is one of the most underutilized ways of purchasing a property with 0% down. Now, in November of 2024, the right to buy discount changed and it's made a huge difference for a lot of people. It's been reduced. Prior to that, there were huge discounts. However, you can still get a discount on your council property if you meet certain criteria. So make sure that you speak to your local council and ask them if you're able to purchase the property. And here's the trick: you can use the discount as your deposit. I do a right to buy mortgage application probably two every 2 weeks, so one a week. And people have come to me because they've seen my videos and they don't believe that it's true. But yeah, if you have a council right to buy or council right to acquire, and you're given a discount by the council, you can use that discount as the deposit. So let's just say, it's valued at 200,000. The council is giving you a 30,000 pound discount. That 30,000 pound discount is the deposit. So you'd only need a mortgage of 170,000 because it's 200,000 value, 30,000 pound discount. So that means you only need to come up with a mortgage of 170,000 pounds. Now, make sure you speak to your local council. Make sure that you speak to a mortgage broker because you're still going to need an income to support the mortgage of 170,000 pounds. So you could also do what's called a concessionary mortgage. This is in most cases where you're living in a property, your landlord is looking to sell, you've been living there for a while, the landlord likes you, they don't want to take the chance of putting it on the market and it's sitting on the market for a while and not being able to sell. So your landlord might say, look, you've been a great tenant. What we'll do is we'll give you a discount on the purchase. That's called a concessionary mortgage. I have a video on that. Make sure you check it out. So you can use that discount again as the deposit. So you're buying from the landlord. Now, you might wonder, why would my landlord do that? Well, it just makes sense, especially now. At the recording of this video, we're still getting used to the renters reform bill. The renters reform bill has changed the portfolio landlord market very drastically because a lot of landlords are like, you know what? I don't feel that I'm protected as a landlord. It seems like the renter has all the rights. Every portfolio landlord that I know is selling properties. That means there's a flood of properties on the market. Now, the landlord doesn't necessarily want you to move out, then put it on the market. So they may be open to you purchasing the property from them, and they may be open to you buying it at a discount because if you buy it at that discount and they're selling it to you, there's no risk of them not being able to sell it, and they don't have to pay estate agency fees. So it saves them money, saves them time, and they have someone that's already been living there. You as a buyer, it's better because then you don't have to invest all the time in looking at other properties and taking your kids out of school, etc. So a concessionary mortgage is one of the ways you might be able to buy with a 0%. My name is Anthony Lindsay, and I've been in finance for over 30 years. When you come to me, I don't charge any fees in advance. I don't charge up front. I will always be open and honest. We'll always talk through the process step by step. I do free mortgage capacity reports. What that means is when you speak to me, you'll explain your circumstances. I'll show you what lenders will lend to you based on your circumstances. So we're not guessing. I'm not giving you a guide figure. I'm actually showing what lenders will lend to you based on your skilled worker visa or based on you missing payments or your low deposit. So there's no guesswork, no money out of your pocket. If we find a deal that you want to move forward with, I can then get you an agreement in principle. As I said, I don't charge any fees in advance. Everything is paid after the delivery of the service. All right, so step 2. So now you've come to me, you've done a mortgage assessment, you've understood how much you can borrow. Now you need to find a property. What people don't often take into account is property hunting is a full-time job. It's not something that you just go look at the first property and buy it. Quite often, you have to look at several properties. It can take absolute months. A quick tip: avoid auctions. If this is your first home, if this is your residential property, if you are not an experienced builder with an exceptional team, do not look at mortgage properties on auction properties. So do not look at auction properties. Why? If you bid on an auction property and your bid is accepted, you have to complete the mortgage in 30 days. And more likely than not, if it's being auctioned because they couldn't sell it on the open market. and they couldn't sell it on the open market because there's probably some problems with that property. Now, I'm not saying that auction properties aren't a great way of getting properties at below market value if you're buying it as a buy to let, or you're going to flip it, or if you're an experienced property investor, then an auction property is great. But for your residential home, first home, somewhere you're going to live, especially if you have a skilled worker visa, the likelihood is you're going to lose a lot of money. Avoid shared ownership. Another thing that people come and ask is that, oh, I found this house and it's worth 470,000 and I can buy X% through the shared ownership scheme. Avoid shared ownership. It's perfect for some people, but for most people, it's not. I would recommend that you Google shared ownership nightmares, and you can see the panorama expose that they've done on it, and you'll find all the nightmares. In most cases, avoid shared ownership. Now, you might be asking about leasehold versus freehold. Simply put, there are two property classes in the UK, broadly speaking. There's leasehold and there's freehold. Most houses are going to be freehold. A lot of apartments are leasehold. Leasehold is not necessarily a bad thing because, as I said, most flats and apartments are going to be leasehold. But what you want to make sure is that you're not getting what's called a short lease. So if you see a home and you know that it should be worth 400,000 and it's being sold for 220,000, it's either an auction, a shared ownership, or it has a short lease. And a technical definition of a short lease is less than 85 years. If you are buying a leasehold property, my guidance would be don't buy anything less than 150 years left on the lease, because lenders will not want to lend on properties that are short leases, or by the time you've finished paying off the mortgage, it ends up as a short lease. So I would say a good rule of thumb, 150 years or more, which is why you should let me negotiate. As I said, I do this every day. I don't charge to negotiate. Let me negotiate the deal for you, because in the negotiation process, I'll save you time, I'll save you money, and any problems with the property, I'll be able to identify before you get too far down the line. Step 3, once you've got your offer accepted, what you're going to do is a full mortgage application. So we've already got you the agreement in principle. The full mortgage application is when we submit the documents that you've sent over to me to the lender. So 3 months bank statements, 3 months pay slips, proof of identification. If you're on a skilled worker visa, your share code and your visa status, your credit and all of that. So you'll have submitted that to me already. So what we'll then do is what's called a full mortgage application. That's when we put the property details and send those over to the lender. When the lender is assessing that application, the first thing that they're going to do is order a valuation. Now, note what I said, a valuation. A valuation is not a survey. A survey is not a valuation. A valuation is a required part of the mortgage process where the lender assesses how much they think the property is worth. So the lender will do a valuation. Sometimes they do what's called a desktop valuation, which is if a lot of properties have been sold in that area recently, usually within the last 6 months, they'll be able to assess the property price. Maybe they'll do what's called a drive-by valuation. But either way, they're going to do a valuation. There's 3 possible outcomes from the mortgage valuation that your bank is doing. Outcome number 1 is it comes in above the offer price. So you've agreed a purchase price of 500,000. The bank comes out, does the valuation, and says, we think it's worth 520. That's great. Don't worry about it. It won't impact the mortgage process. The other outcome is it might come in at value. So you've got an offer accepted for 500,000. The bank goes out, does the valuation, and say, we think it's worth 500,000. Now the problem comes if your valuation comes in below the offer price. So you've got an offer accepted at 500,000, and the bank comes out and says, we think it's worth 480,000. The reason why that's a problem is you'll have to make up the difference of that 20% by paying more towards the deposit. because the loan to valuation will be thrown off because the loan will be based on the valuation, not on the offer price. So, do you need a survey? Again, a valuation is different than a survey. A survey is something that a buyer does to assess the structural implications of buying that property. So, is there any subsidence? Is there anything going on that they need to know that might cost them money that they want to know before they get into the process? I can help you arrange a survey. Do keep in mind you pay for the survey out of your pocket, and the survey is for you, it's not for the lender. Timelines: the full mortgage application process usually takes about 10 to 15 business days. So that's from the moment you have given me the okay to do the full mortgage application. I've submitted all the documents and they've started the evaluation process. It takes about 10 business days. This is why you should always speak to a mortgage broker, because a mortgage broker is going to be able to talk you through the process, help you keep up to date with what's going on, answer any questions that you have. Step 4, you now have your mortgage offer. Whoop, whoop. So that means the lender has said, yes, we'll send to Mr. Smith. We'll do a mortgage for Mr. Smith. Yes, we'll do a mortgage for Mr. Smith on 123 Main Street. We've looked at his income. We've looked at his outgoings. We've looked at all of his circumstances, and we're willing to do a mortgage. So they will now supply what's called a full mortgage offer. So you now have the mortgage. This is what you've hired a mortgage broker to do. So at this point, it now gets handed over to the solicitor. So this is when your solicitor and the seller solicitor start to do checks and communicate with each other. If you're working with me, we'll arrange a meeting at this point where we'll go through the offer, answer any questions, and make sure that you understand the offer. Now, one of the great things about working with a mortgage broker is they will continue to review the market. So if you have a mortgage offer, and let's just say the Bank of England changes rates and that product class, so for that specific product that you have, the rates change, the mortgage broker can put you on that cheaper rate. Because what I do is I scan your specific lender and your specific product. And if a cheaper product comes out in that product class with that lender, what I'll do is I'll contact you and say, would you like me to put you on the cheaper rate? Now, you might be wondering, well, what if rates go up? Don't have to worry about it. If rates go up, you are protected. Once you have that mortgage offer is usually good for about 6 months. But what I would caution you, don't go out and start getting credit cards and loans. Until you have those keys and you've paid your first mortgage payment, do not take out any more credit, because it is, in rare cases, a case where some lenders may need to run another credit check. Or let's just say the purchase process is taking longer than planned and your mortgage offer expires and they need to issue a new mortgage offer, they may need to do another credit check. I have seen instances where I've had clients, I've told them not to do this, but during the that negotiation period, as far as the search period, I should say, when the solicitors are doing the searches, the process took longer than planned, and then we needed to do a new mortgage offer because the mortgage offer expired, and the person had gone out and taken out a £10,000 loan. Fortunately, it didn't knock out the affordability, but it could have been the case where when they did the new credit check, seeing that £10,000 loan, that mortgage was no longer affordable. So step 4, you get your mortgage offer. I, as a mortgage broker, will then hand you over to the solicitor, and then everything else is between the solicitors, 4 to 6 months, and you are protected from rates going up. But if rates go down, a good mortgage broker will put you on that better rate. Now, the caveat is we're not looking at the entire market at that point. So let's just say you're doing your mortgage with Halifax. We're looking at Halifax changing their rates for that product. Okay. So I do have sometimes clients call me every 6 weeks when the Bank of England meets and, oh, has the rate gone down? It doesn't work like that. A good broker, you should be able to trust that they're always going to find you the best deal. Now we're on the home stretch. Earlier, I spoke about the fact that it's not legally binding at the beginning of the process. So just because a seller has agreed to sell to you. It doesn't mean that they have to, even if they've accepted your offer. When you get to the later stages, so that's the exchange, this is when it becomes legally binding. You get to set the exchange date. So you as a family will determine when you want to exchange and when you want to complete. Most people do the exchange and completion about a week or two apart. Keep in mind your first mortgage payment might be higher than your monthly payments. And this is because, let's just say your mortgage payments are £2,000 a month, but you take ownership of the property halfway through a month. That means you're going to pay that half of a month plus the one full month's payment. So, my guidance to my clients is always put about 2 months' payments aside in the account that you're going to pay your mortgage from. That way, when the first payment comes out, you'll have some extra money left in the account because it's never going to be 2 months' payment. It will be a figure between 1 month's payment and 2 months' payments. Also, if you're renting, you want to make sure that you have notified your landlord. One of the upsides, I think, of the renters reform bill is the fact that you can give, I believe, 2 months' notice. So make sure that you've aligned everything with your landlord, that your completion and your exchange are in line with when you'll be moving out of the property. You want to probably give yourself a little bit of overlap. That way, if let's just say something goes wrong, you're not in a situation where you can't live in where you were and you can't access your new property. But this is pretty much the home stretch. Now, a lot of people are going to ask, how do I prepare for a mortgage? Preparing for a mortgage is pretty straightforward. First and foremost, tidy up your bank statements. Tidy up your bank statements. If you have things on your bank statement that don't need to be there, if you're paying for things that you no longer have, if you have multiple insurances for the same thing, just tidy that up. What the bank wants to see is your salary comes in, you pay your rent, you pay your bills. They don't want to see lots of transactions, certainly don't want to see gambling transactions. That's a big no no. So tidy up your bank statement. Key thing, check your credit report. I've worked in finance for over 30 years, and it's very rare that someone checks their credit report and their credit report is exactly as they thought it would be. I would suggest checking your credit report at least once a year, but best practice would be twice a year. That way, if there's anything incorrect on your credit statement or your credit report that needs to be corrected, which happens all the time, especially with mobile phones, you can correct it before you start the process. Banks don't want the explanation. So you may say, oh, well, I paid it, but they just misreported it. Banks don't care. I don't care. Nobody cares. What is printed is what they'll go by. So check your credit report at least once a year. I'd advise twice a year, but check it 6 months before you think you're ready to get a mortgage. I'll say it again. Check your credit report 6 months before you think you're ready to get a mortgage. Because sometimes resolving errors on your credit report may take a while to resolve, and then they take a while to update. And what you don't want to do is rule yourself out from some of the top lenders because maybe you have a mobile phone bill that is saying that you missed a payment when in fact you didn't. Maximize your deposit. So it's better to pay off small bills and have maybe a lower deposit than to just have a huge deposit and you're paying out on all these little things. But maximize your deposit by putting it in a high interest savings account. Maybe you don't go out as much. Maybe you eat in more. Maybe you don't go to the movies. Maybe you reduce your outgoings. But make sure you maximize your deposit. And the high interest savings account is probably one of the best ways to maximize your savings. And what I mean by high interest, if you're saving in your current account or with a high street lender, you're probably not getting the best interest rate. So what you want to do is go to Money Savings Expert. That's Money Savings Expert, and just look at the savings accounts. I would usually suggest to people break your savings into three different pots. So let's just say you have a larger deposit, 80,000. You might want to put 50,000 in a high interest savings account that is 30 days access. Then you might want to put another chunk in something that's 14-day access, and then another one in something that is instant access. The reason why that is, you get higher interest, the longer the access period is. So if you can't access it for a month, you're probably going to get a marginally higher interest rate than instant access. And keep in mind, because your full deposit doesn't come out of your bank until towards the end of the process, you'll know well in advance when you need to pay the deposit. If you're working with me, all of the fees that you'll be paying that are related to the mortgage will always be laid out from the very first conversation. So I'll explain my broker fees. None of them are ever paid in advance. I will explain valuation fees, application fees, everything that you are never on the back foot when a fee is due. Speak to a mortgage broker, and don't speak to a mortgage broker that you can't be honest with. If you feel you can't be honest with your mortgage broker, then find another one. A mortgage broker is there to assist you based on your circumstances. Lenders want to lend, they want to give you money, they want to do a mortgage for you. Each lender is going to have different criteria, which is why going to a mortgage broker is the best bet. But you want to make sure that your mortgage broker is aware of everything. Banks don't mind if there's glitches or if there's some, bumps in your credit. What they don't like is something called non-disclosure. As I said, banks aren't stupid. I've been doing this for 30 years. I can look at someone's bank statements and figure things out. Banks don't like to feel that you're hiding anything. So don't hide anything from your mortgage broker. Your mortgage broker works for you. Your mortgage broker is there and exists to get you a mortgage. So they're going to do the very best that they can. So speak to a mortgage broker first. Speak to a mortgage broker at least 6 months before you think you're ready. Brokers work with multiple lenders. So there are brokers that are whole of market. So that means they work with every lender. Other mortgage brokers work with a panel of lenders. But either way, it's going to be better than going directly to your bank because your bank can only talk to you about their products. Don't be afraid of specialist lenders. There's many occasions where a client has come to me and maybe they've had a credit bump, or maybe they don't want to put their spouse on the mortgage because the spouse has poor credit. And I would say that usually is not the best way of doing it. So let's talk about that. But let's just say there's a circumstance or something that the mainstream lenders won't do. We can go to a specialist lender. If it's a credit issue, then usually what I would say to the person, let's get the mortgage with the specialist lender. Let's pay it well, tidy things up, do maybe a 2 or 3 year term, maybe 5 if your credit was really bad and getting with that specialist lender was the only way of getting a mortgage. But then when you remortgage, your mortgage will be a lot cheaper the second time around if you've tidied up your credit. So you have a positive payment history with your mortgages. Any missed payments, late payments, CCJs, defaults, anything of that nature will be so far behind you that when you go to the next lender, when you go to remortgage, you'll be able to go with a high street lender. So don't be afraid of specialist lenders. And a mortgage broker is going to guide you through the process. So some people feel that I over explain things, which is why I started doing these videos, because it's easier for me to, on the call with the person, talk about concepts and say, oh, you were asking me why I'm suggesting that you don't do a auction property or shared ownership. And I can then direct them to a video or something like this, where I just take the time to go through the mortgage step by step, no pressure, no selling, no tricks. You know that I'm a reputable person because you can Google me and you can see that I'm someone that does things the right way. So we will guide you through the process. And it's not a good idea to go directly to your bank because, as I said, they may be offering you their best rate or their best deal, but it doesn't mean it's the best deal. Besides the fact their hours are limited, they're not a service-based industry. I've been a bank manager for the three major brands, and I will say my staff were amazing. However, my staff get a salary whether they do the mortgage for you or not. The thing with mortgage brokers is we don't get paid unless we deliver a great service. So it's a relationship business. So you're probably going to get a better service from a mortgage broker than going into your bank. In most cases, there are some amazing branch staff, but they're limited. They're not going to understand mortgages as well as someone who's working with 15, 20 different lenders, who has to deal with complex cases. So if you're going to one of the high street banks, They pretty much just cater to pretty straightforward cases, what we call vanilla clients. So always use a mortgage broker. More tips: be honest, be realistic. So be honest and be realistic. If you're on £30,000 a year and you have a small deposit, you cannot buy a £600,000 house. That doesn't mean you can't buy a house. So be honest and be realistic. A good broker thinks about your future. So I'm going to be thinking about not just the mortgage, but when you go to remortgage, will you be able to get a remortgage? A lot of people don't understand what a remortgage is. So check out my video about what remortgages are. But simply put, it means you already have a mortgage, the term has come to an end, and you now need to enter into a new mortgage for a new term. Set aside time to complete your fact find. I said it earlier. Most delays with mortgages are not caused by me, and they're not even caused by the solicitor. Most delays with mortgages are caused by you because you don't have your documents ready, or you send things that I didn't ask for. So, roughly speaking, for pretty much every mortgage, you're going to need 3 months bank statements, 3 months pay slips. You're going to need proof of your identification. If you're working with me to do the due diligence up front, I do ask you for your credit report from Check My File. You're going to need proof of address. So let me break down that checklist a little bit. 3 months bank statements. That's 3 most recent months. So the 3 most recent months, the full month. It's a bank statement. It's not a transaction statement. If you're transferring money between accounts, make sure you provide all the bank accounts. You're going to need 3 months pay slips. We cannot accept JPEG, so most employees have a portal that they can go to and download their pay slips. You're going to need proof of identification. You cannot use an outdated passport or an outdated driver's license. It has to be a valid piece of ID. Proof of address. In most cases, lenders don't accept mobile phone bills, and some lenders will not accept a bank statement for dual use, meaning you can't provide the bank statement as your 3 months bank statement and use it as proof of address. If you're on a skilled worker visa, you're going to need your S code. So you're going to need your share code that we can verify your visa and send that over to the lender. Only supply what's requested. Some people are like, I'm going to impress my mortgage broker by they've asked for 3 months and I'm going to send them 7 months. Don't do that. It slows down the process. Maybe we see something that we don't need to see. So if we're asking for 3 months, send us 3 months. Don't send us 7 months. Don't send us 2 months. Set the time aside to do this, because our process, as far as the things that we ask for, I'll be honest with you, it takes about 15 minutes if you've got a 15-minute period that you block the time and you're doing it, because you're getting your bank statements. Most people do online banking. You're getting your pay slips. Most people have a employee portal they can go into. Your ID, you should have a passport. You should have a driver's license. You just need to scan those over. The thing that might take a little bit longer is your credit report from Check My File, but even that is about 4 minutes, if that. Supply what has been requested. So I've said it 2 different ways. Only supply what's been requested, and also supply what has been requested. If we're requesting it, it's because we need it. So those are more top tips on how to get a mortgage. My name is Anthony Lindsay, and hopefully you've enjoyed this session. Hopefully you'll subscribe to my channel and you'll share it with friends and family. What I try to do is explain mortgages, mortgage products in a way that you can understand them better. I'm not an online influencer. I am actually a mortgage broker that you can book an appointment with. You can call, you can speak to. I do completely free mortgage capacity reports. Everything I do is transparent. It's all within the guidelines of the FCA. As a reminder, your home may be repossessed if you don't keep up the repayments on your mortgage. So make sure you reach out to me. Make sure you like, make sure you subscribe, because I am here to help you. I'm here to answer your questions. If you like this video, please share it with someone who you feel it would be useful to, because a lot of the times in communities, we have a lot of misinformation that circulates about the fact that you can't get a mortgage or ways to trick the system. Don't do that. Make sure that you're open and honest. Make sure you speak to a reputable mortgage broker with the appropriate licenses who's going to put your family first. And I would say, personally speaking, don't ever pay a mortgage broker fees in advance. Never do that, because that doesn't mean that you're going to get the mortgage. So speak to a mortgage broker, make sure that you're paying for services that are already rendered. Make sure you pay your mortgage broker, because you can go to a bank and get a outcome, or you can go to a mortgage broker that's going to support you with the entire process. They're going to explain to you how the process works. They're going to help you find a solicitor. You'll be able to call them in the evening. You'll be able to, in my case, speak to them on Saturday. So I hope you liked the video. Please, please, please leave a comment. If there's something that I've said that you'd like for me to do a video on, leave a comment. By subscribing and leaving comments, it means that the YouTube algorithm will put this video in front of more people. My goal is to make sure that people are educated about finance and about mortgages so that they can make informed choices, build generational wealth, and always be in a position where they have the right product for their circumstances. As I said, be sure to like, subscribe, and make sure that you leave a comment.